You're listening to the Reinvest Podcast, where each Tuesday we show business owners and entrepreneurs how to diversify into real estate by equipping you with the tools and tactics to build generational wealth. Your hosts, Garrett Gatton and Seth Ciminillo. Hey guys, welcome to episode 109 of the Reinvest Podcast. There has been a lot of big changes in our world in the last couple weeks. Seth and I started a new investment company called the Reinvest Capital, and we're joining the brand of our investment company and the podcast under one roof, under the Reinvest brand. Very excited about that. Probably the best way to learn about that would be to go to our show notes, click on the link, join our Huddle, which is our monthly news piece that kind of keeps you up to date on any investment opportunities through Reinvest Capital, along with what we're seeing in the commercial real estate industry. So it's been a wild ride, a lot of good change and exciting things in the future. But I want to let you guys know about that. And we're going to jump right in today. We've talked about taxes before on this podcast, but today we're going to get into the forward-looking nature of what's happening with the IRS that is absolutely relevant for anybody who makes money in this country, let alone wants to do business in this country. And so with us to do that is Carlos Samaniego, founder of Tax Debt Consultants in Southern California. Carlos, you're a licensed enrolled agent with the Department of Treasury, and your niche, what you geek out on, is you have a specialty tax practice where you solve people's complex tax problems. And that's what you're known for.
That's it. I always tell people, my tax business is I'm the last person you ever want to hire. That means you're in trouble if the government's coming after you for some reason or another. But that's what I do. I really do geek out on helping people solve their tax problems. And maybe it's because I had my own tax problems back in the day. So
yeah, you get to take your pain and kind of bring it full circle into purpose to help other people. And I think all of us have probably, if you've been an adult for any amount of time earning income, or you've started a business, you've probably got a document from the IRS. And that's always an intimidating seal to see on that little window peeping out of a piece of mail. And you're just like, oh no, what's going to happen
I'm
here?
always skeptical that it's like spam.
Yeah, right.
But you can't ignore it too much, because if it's real, then you're gonna be in trouble.
Okay, the IRS wants my money. Okay, yeah. So, Carlos, give us a little context. How did you get into the work? Like, most people don't wake up in the morning, or when they're little at like the third grade, job fair, they're like, I want to be a tax consultant.
My son told me yesterday, this is classic, but he told me that he wanted to be an astronaut. He's like, I want to be in space.
That's what you hear more of, not
so
tax consultant.
I would get that. So how'd you get to where you're at?
It's kind of interesting. I did it kind of the way most people that get in tax problems do it, accidentally. And this goes all the way back to my early 20s. I had gotten out of the military, ended up becoming an EMT medic. You guys know the EMT guys, the guys that are in the ambulance driving around, right? Mm-hmm. So I started doing that type of work. And I remember like the second year I was doing that work, I was working a lot of overtime, a lot of 24-hour shifts, right? It was holiday season. And the reason I was doing it is trying to make some extra money, like we're all trying to do, right? Here we are getting in the holiday season. And I remember the older guy. And when I say the older guy, he was like maybe 20, 21, but he was older than me, right? And
age is relative.
Yeah, exactly. So he said, hey, dude, you don't have to work so much. Just claim more exemptions on your paycheck. Take it from 0 to 10, which a lot of people do, and you're going to get a bigger paycheck. And Lord and behold, I did that. And I was getting some pretty big paychecks considering the amount of hours I was working, but they weren't taking any taxes. Well, tax time rolls around the following year, and I go to self-prepare my return, which I did back in the day. You could do that, and realize I had a big tax bill. So I'm like, I can't afford that tax bill, so I just didn't file the return. And I can guarantee this story, when people hear it, they're like, I've done that before, right? Well, the year continued on. I never changed it. My lifestyle started fitting the paycheck that I was getting. I always remember I got a bigger apartment. I ended up buying a 1987 Nissan hardbody truck back in the day, right?
Wow.
And the following year, same thing. Go to prepare the returns, big tax bill. Didn't file it because I couldn't pay the tax bill. Guys, that went on for 8 years.
No way. Seriously, you didn't file a tax return for 8 years?
8 years. And back then, compared to nowadays, when you don't file a return, they would just mail you a letter. Well, I got the letters and I did what everybody else does. You look at them, I'm like, well, I can't afford to pay it. So either I threw it away or just didn't open the sucker, right? And it wasn't until I would say, so it went 8 years. And then around the ninth or 10th year, I remember the state of California reached out and I got a letter from them. We didn't get your last year's tax return. And literally I got caught. The state caught me. So I ended up filing the state return. I still hadn't filed the IRS return. And this literally goes on. So this is my early 20s, 8 years. I'm now in my 30s, right? And now I haven't filed tax returns. I've got almost a 6-figure tax bill dealing with this thing. And it wasn't until my mid 30s where I completely ignored it. And this is what people do when they get themselves in this type of problems. One, they'll ignore it. Two, if they want to do something, they don't even know who to contact, right? Who do you tell that, do you go to your best friend? Hey, I'm not filing my taxes. What do I do? It's a secret that a lot of people just keep to themselves because they don't know what to do.
Yeah.
Guys, it wasn't until I met my future wife. By this time, I'd gotten out of the industry. I ended up getting fired, and that's a whole story in itself. Ended up getting fired from that job, and I decided to go into the real estate industry. Literally, I ended up becoming a lender at the time. And when I was a lender, I actually met a potential client that was trying to buy a house, which happened to be my future wife. And we ended up dating, and it wasn't until, a couple of years later, I actually married her. And then I did the scumbag move, didn't tell her I had tax problems. And it wasn't until after I married her that I decided to do something about it.
Wow. And she was probably a little bit shell-shocked by your tax bill, huh?
You know what? A lot of people say, well, why didn't you tell her? Because I thought she would dump me, right? It's just like, who the hell wants to deal with somebody with 8 years of unfiled returns and a 6-figure tax bill? So I ended up, finally looking into who can help somebody with tax problems. And what I ended up doing after we got married, I actually went and talked to this person who happened to be an enrolled agent like myself. And he told me one thing. He said, Carlos, you're not a bad person, but you made a stupid decision. But it's a decision that we can actually fix. And when he told me that, so much relief came off my shoulders. And God rest his soul, he just passed away a couple of months ago.
Wow.
But this man changed my life. And then I actually was able to go to my wife and tell her, hey, I got something to tell you. And I was expecting the divorce, paperwork to come out a few weeks into this thing. And she just told me, what are you going to do about it? And I said, I found the person, he's going to help me, and we're going to get this fixed. And luckily she stuck around. And she's actually the co-founder of this company, sitting right behind my shoulder now.
Oh, wild. So listen, if you're listening to this episode, you thought you were going to come get some real estate advice.
Go
get
yourself a wife.
You're going to get some marriage advice today too.
Absolutely.
How not to start off in a new marriage. I appreciate your transparency on that though. We all want to be the heroes of our own stories, right? And if we're honest, a lot of the learning that we've done has come through mistakes. It's a matter of when, not if. And so I'm always refreshed when a guest can come in and kind of share, maybe air out their dirty laundry, because many times it's the foundation now that your business is resting upon, right? Your own personal journey with that.
So, Garrett, I'm glad you said that, because so many people do not realize how their story can help so many people. And and for years, I never shared that story because I was terrified what my clients would think of me. Well, shoot, you're just as bad as I am. And you know what? It's the exact opposite thing that happened. My business exploded. In fact, there's a book directly behind me right there. It's called Love and Taxes. It's a whole book on how to deal with tax problems and with your relationship.
Wow.
Issues going on. So yeah, because I would say about 30% of the people that actually reach out to me are the spouses or wannabe spouses of somebody that's got tax problems.
Yeah, right.
So, yeah.
Well, and when you're marrying somebody, obviously finances is one of those big topics that you have to put out in front, talk about, make sure there's alignment on. And I remember when I got married, I brought, some school debt into that relationship. So there is some financial ramification of partnering with somebody in marriage, and really important to know.
So you had 8 years of some tax problems of not filing taxes. You found the right person that had the right strategy to help you get out of it. How many years did it take you to get out of that scenario?
You know what? Once we actually got started, literally in our first meeting, he gave me the game plan. Here's the game plan on how we're going to get you out of this problem. And it literally took within, I would say, within 6 months, the IRS was completely off my back because we had to go through the process of filing all these old returns that were years old, right? And then come up with the game plan and solution with the IRS. So I would say within 3 to 6 months is actually a better time frame. It's been so long, I don't even remember. Because even back then, I remember when we finished the process and he said, everything's in play, everything's going to get settled. And then I said, what do I do next? He goes, you're just going to stay in touch with me because I'm staying in touch with the IRS. And then kind of like the parting words out of his mouth, he goes, hey, have you ever decide to have a career change in your life? I think you'd be really good at this. And that's exactly what
a little foreshadowing there. Interesting.
Well,
So
he must
is
have knew
that
something was he must have knew something was coming down in the real estate industry because this was literally back 2006, 7, right around that time frame.
Wow.
So and I ended up becoming a lender, a real estate agent, and then we had that whole crash in 8, and then 2009, 10, or 11. I think is right around there is when I actually got out. A couple of years after the crash, I finally gave up on the real estate industry and had to figure out what my new career was.
Wow.
Yeah.
So one of the things that we were talking about off camera that I think is really interesting, and I want to make this the meat of our episode today.
Yeah.
You said something really interesting. You said that the IRS has been shut down for the last 4 years.
Yeah.
More or less. And I think a lot of us would be like, well, what do you even mean by that?
we've still been paying taxes.
And holy crap, what happens when they open back up, right? And so there's a forward-looking conversation here that I think you can speak to. Help our listeners understand, what do you mean that they've been shut down for the last 4 years, and why is that even relevant?
Sounds good. So about 3.5, 4 years ago, basically at the beginning of COVID, the entire country, well, obviously we know the entire country started shutting down, right? Businesses started shutting down. Well, pretty much government agencies started doing the same. And Congress, in their infinite wisdom, decided, you know what? We can't have this pandemic and the country dealing with this. And then on top of that, have government agencies coming after them for past due balances. So they basically told the government to stop sending out letters.
Like a moratorium on any kind of tax lien collection business.
Absolutely. So nobody got any letters. You didn't file your returns. You didn't get notified that you didn't file returns. There was the occasional letter that maybe kind of slipped out, but there was nothing really consistent. And most letters with the IRS there's pretty consistent timelines. So that pretty much stopped. Most IRS personnel went home, and the ones that were working from home. But there was a lot of mail, and there was news reports about this, and I talked about this in the past, is that the mail was just accumulating in bins and then eventually storage units at the IRS.
No way.
They had millions of unfiled returns that people, to this day, my wife just told me, we followed up on one of our clients, they still had 3 years of unfiled returns that were filed 3 years ago. The IRS probably lost it. So that's kind of what's happened.
That's incredible.
A lot of people, they'll come to me, they'll say, well, I know I owe money or I haven't filed, but they haven't really, I think they forgot about me. Well, guess what, guys? They didn't forget about you. It was just this moratorium that just happened. It's why you didn't get anything. Well, pretty much all that changed, guys, literally at the beginning of the year. At the beginning of the year, the IRS said, all IRS personnel goes back to work, get back in the office.
Open for business.
They're going to turn the collection machines on, the automated collection machines, and the letters started rolling out. Millions upon millions of collection letters started coming out.
So these are people, expound upon who's getting a collection letter.
Basically, anybody who has any type of balance with the IRS. And right now, there's 50 million people who owe the IRS a combined amount. I have it written down over $1 trillion.
That's a lot of money just hanging out there.
That's
just hanging out there.
Delinquent taxes?
Delinquent taxes that have not been paid.
There's $1 trillion of delinquent taxes just hanging out there. Wow.
Absolutely. And right now, there's 11 million people who currently have a balance due. So
What's the difference?
these were people from the IRS's offices that recently got letters. I'm sorry. Yeah, recently got letters. Because think of it from this point of view, guys. IRS can't send out 50 million letters, right?
Right.
Because what would happen? Their phone lines would just get wiped out.
Yeah, they would. It's too much supply hitting the market.
Bingo. They have to send waves, literally waves of letters. So that literally August 16th. So this was a couple of months ago. I'm trying to get the exact date. So at the beginning of the year, they started sending out these letters. They're called CP 504s. It's kind of, you owe us money, and we're going to we have the right to do a levy. Those are all these letters that started coming out. But on August 16th, the scary letter, it's called letter 11. If you want to write that down, letter 11, when you get that from the IRS, it's a final notice before levy. That basically means that you have 30 days to pay us in full, or give us another resolution, or we're coming after your bank accounts, or we're coming after your paychecks, or if you're self-employed, we're coming after your 1099s.
Wow.
That you're actually getting.
So let me expound a little bit for if you're listening to this, and there's a personal tax component that is relevant to anybody listening, assuming you're of working age. Then there's also a business component to this as well that would affect an outstanding balance, or anytime you're filing a tax for a business entity personally, there's an opportunity for an error to happen. So, and we had this before. It's not always like you intentionally or unintentionally shorted the government money. Maybe there was an error on your return, or it was filed incorrectly, or you didn't set something up correctly in the front end. And there's a myriad of reasons why you might get something from the IRS, not just fraudulent. And we had a business entity that we had set up in the last 2 years. And there was something about, excuse me, how our CPA filed it, or a piece of information that we didn't give them, that triggered the IRS saying, hey, you owe this balance. And that's always a shocking thing, because if you went to a CPA, it means you don't know taxes. And so you just know you owe money about something you know nothing about. And so we went to our accountant and said, hey, here's this notice. What do we make of this? And they, on our behalf, went through the processes to dispute and resolve that issue. And there was a resolve. But had we not had somebody advocating for us, I would have been lost, with a capital L, on how to even navigate that process. So there's a lot of reasons why somebody might get a letter from the IRS.
Absolutely.
So you get, the letter 11, or there's these different things coming out in waves, and they're doing it in proportion to their ability to process these filings. We've seen on the news, though, that it seems as though there's these rumors or even confirmations that they're overstaffing the IRS. Is that a factor in this conversation? Is that hearsay? Is that happening?
Yes, it's both yes and no. There was a lot of news that the IRS had gotten they were going to get 80,000 plus new agents to work there.
Carrying guns.
It wasn't going to be 80,000 new agents. In fact, it was just 80,000 more employees over the next, I believe it was over the next 10 years. And what the news media kind of hyped about, didn't really kind of talk about, they were also going to lose 30 to 40,000 people because they were retiring. So they were just kind of replacing the people that were actually leaving. And if anybody that's ever called the IRS that says they can't get through, or they're on the phone for hours, you want them to hire people, because there's nobody there to pick up the phone. And that's what causes these, being on the phone for 8 hours, or being on the phone all day and then getting disconnected, which even happens to us sometimes, right? Is we want a certain amount of staffing there. That way, when there's problems like you just mentioned, that you had a problem, you can pick up the phone and deal with the problem. Otherwise, we're dealing with months. I've got cases right now. It's been years since we've actually been able to resolve anything, because it just got caught up in the system.
Yeah. Well, and one thing too that's beautiful about the IRS, and I say that sarcastically, when you have an outstanding balance, there's a rolling interest accrual on some of those things. So the longer you do the stick your head in the sand method, that bill just gets larger and larger, and you have to deal with it. Now, you guys probably help figure out how can you negotiate, and is there any negotiating with the IRS?
Yeah, a couple of things you brought up there are really good. Yeah, interest accrues. A lot of people don't realize daily penalties accrue daily, and there's interest on the penalties. So, and that by law keeps on accruing until the balance is paid in full. A lot of people will tend to think, well, if I set up an installment agreement, they're going to stop the interest and the penalty. No, they're not. It has to accrue. It's a congressional thing. So absolutely yes, that bill, it's a snowball effect, right? We talk about the snowball effect of debt. It's a snowball effect with the taxes as well. In terms of negotiating debt, here's the thing. When you actually have tax debt that you owe the government, there's what I call four major categories you can deal with that debt. Category one is that you have the ability to pay back the debt. That's kind of pretty simple, right? It's a payment plan. But what if you can't afford to pay back that debt? The IRS has a great option. It's called currently not collectible. That means, which I'm getting a lot of people in the real estate industry, a lot of self-employed people who are maybe kind of suffering because they're not doing as well as they did in previous years, that they're unable to pay back their debt. So the IRS actually, here's what's kind of nice about them, that they will actually ask, how much are you paying for your mortgage, your utilities, your food, your housing, your car payments, your insurance. They want to make sure that you can actually pay for your basic necessities before they're even going to try to collect. And if those numbers don't correlate, you're not making enough money to pay for your necessities. There's what's called a currently not collectible with the IRS, where they just won't collect from you anymore.
But those things will still accrue, though.
It will still accrue, but here's an insider.
So they defer it? Is it like it's just deferred, or
it continues to accrue, but they won't collect, but the debt has the ability to expire. Tax debt does expire after 10 years.
Seriously?
Yes.
So if you can wait them out for 10 years.
Yeah. Well, and here's, you're thinking, I got to wait 10 years, but you got to remember, some of this debt might be 4, 5, 6, 7, 8 years old. I actually had a Hollywood, someone in the movie industry, pretty high up in the movie industry, reach out to me because he had a pretty significant tax debt, close to $1 million. And when I did my initial investigation, trying to come up with that game plan, how are we going to solve this thing? I literally told him, hey, here's what's going to happen. We're going to do nothing for 4 months. And I'm just going to monitor the IRS and what they're doing and where they're at in their collection. And initially he got really upset. He goes, what do you mean? I hired you, you're not going to do nothing. And the reason we weren't going to do nothing, because we had $500,000 of tax debt that was going to expire in 4 months.
Wow.
And literally that's what ended up happening. We waited that time frame. The debt completely expired. It was some older debt, right? It expired, and now he's fully compliant. He still had a small tax bill left, got him into an installment agreement, and he's good to go. But we wiped out $500,000 of tax debt.
Wow. That's wild. That
so,
is wild.
And then the last two, I talked about the currently not collectible. The other one is the offering compromise. This is the one people hear about on the TV and radio, right? Settle for pennies on the dollar. Yes, the IRS does do that, but it's very strict guidelines. It's some complicated paperwork, and basically it's meant for somebody that doesn't have any assets, equity, any type of significant savings or retirement account, or somebody that does not have a lot of residual income. And when I say residual, income after your expenses, I've had many cases anywhere from $300,000 to $100,000 that's been wiped out for a few $1,000s. So that is a possibility.
Wow.
So those are the top three. And the final one, that, believe it or not, that you can bankrupt tax debt. A lot of people don't realize that. Strict rules in regards to that, but that is a possibility.
I feel like you're making a lot of good cases for me not to pay my taxes.
A lot of people, I've actually heard that. It's like, well, if I just go 9, exactly.
Probably not worth all the conflict it'll create.
So let me ask you this to kind of put a spin on it and make this actionable for somebody listening to this, right? And it's actionable if you're listening and you are in this scenario where you haven't filed taxes, you have a letter from the IRS you don't know what to do with, right? Yeah. But let's say, like, from all of the scenarios that you see, you're seeing the aftermath, you're seeing the train after it crashed, and you're like, where do we go from here? So the question is, what advice from seeing these people do you have for those who maybe are paying their taxes currently? They haven't had that happen to them yet. How do you avoid getting in that place?
The most important thing is, I think one of the simplest ways for people to stay out of trouble is just good overall bookkeeping, especially for a lot of your readers,
Yes.
Listeners here, right?
Yes.
Whether you're entrepreneurs, real estate agents, or investors, what tends to get a lot of people in trouble is just terrible bookkeeping. You end up doing your tax returns. Remember, your tax returns are only as good as the records that you've kept.
Yes.
So you file these tax returns, and I see it with a lot of my self-employed people. They either file their own personal returns with made up numbers or just terrible numbers, right? And then you're looking at it, it's just like, okay, you're an insurance agent, but you got $18,000 for meal expenses. And he goes, well, yeah, every time I went to dinner, that's a bit, no, that's just bad records, right? So I honestly think that's one of the smartest things they can do. For your real estate agents out there, your number one tax deductions for most real estate agents is mileage. They're in their cars, they're looking at properties, driving around. But that's going to be your largest tax deduction, but it's also the most audited tax deduction is that mileage. Because most of the time people are just making up that number, right? Mm-hmm. So I recommend a great app. It's called mileiq.com.
I love that app.
Perfect. Foolproof method of when you get audited, you just print that report up. That audit part is just gone. Yep. I mean, that's a great tool.
Pro tip for anybody who has that app, do on a consistent basis, go through and log and categorize your miles. Don't wait to the end of the year and do 12 months worth of categorizing. A friend told me not to do that. So, no. And I'm so glad you said this, Carlos, because we have talked on other episodes, the importance of not having, when somebody doesn't have good bookkeeping, good record keeping, tracking expenses, having it down in a digitized, centralized format in QuickBooks, you have a hobby, not a business. So we've talked about that. And one of the benefits of running a business like a business is you can file your taxes correctly and have confidence that you can provide and produce that information, A, to your accountant so that they can do it correctly, and B, if in the event you were to be audited, you could make a defensible argument against anything that might be a dispute. And the second thing I would want to say is stop, if you're listening to this, stop tripping over $1 to pick up a penny. And what I mean by that is people self-file their taxes and there's zero reason to do it. I self-filed my taxes because I thought I was saving money.
No.
The next year that I paid a guy $150 to do it, I got more money back on my taxes than I did before because I was ignorant. Yeah. So what you will pay a tax consultant or a CPA to do your taxes, file your taxes, give you tax advice is literally advice that will save you tens of thousands of dollars, especially if you're a business owner.
It's worth its weight in
That's
gold.
my high horse.
Especially if you're a business owner. If you're a business owner and you're still trying to do your own taxes,
shame on you.
Well, just let down your pride. You know what I mean? You don't need to be doing that. It gets really complicated really fast, especially when you have employees and multiple entities and you're trying to juggle all that, and it's just not worth it.
The compliance rules you got to follow.
Oh yeah.
It's just for you to try to do that and run your business. I don't even do my own bookkeeping. I don't even do my own tax returns. Mm-hmm. And I'm a tax person, right? So when I see these individuals, like you said, they're trying to do it themselves. Yeah, they saved a few pennies by doing it themselves, but now they're paying me a lot of money to go fix the problem after the fact, and it could have been prevented right at the beginning. And now they're having to deal with penalties and interest from the IRS, the cost to hire somebody to go deal with the IRS, the stress involved here, the embarrassment, the shame, because A lot of times I will get phone calls like from the grocery store where people like, I went to go buy groceries and my card didn't go through. I didn't realize the IRS levied my bank account, or the state's a big one. The state levied my bank account. And then by the time I do make a few phone calls and we've gone through the process, it's like, yeah, they sent you like 12 notices and you ignored all of them.
Yeah.
They've given you the opportunity. The IRS and state never just do it out of the blue.
Right.
You've gotten multiple notices, multiple letters over the course of now with IRS people, 4 years over, and you just ignored every one of them, and you can't ignore it. That's a big thing. And you can't ignore these notices.
There's before you go into the smaller pockets, and Doctor Strange, Mordo.
I know Doctor Strange.
There's a guy, he's like, the bill comes due. That's what he keeps saying, the bill. And that's true at the IRS. You want to stick your head in the sand, it doesn't go away. You've just deferred your problem and made a bigger issue. If people say bad things come in 3, and I heard somebody on a podcast say, bad things don't come in 3. One thing that goes addressed turns into 2 and 3 bad things. And a lot of our problems are because we've procrastinated on them, we've delayed, we've chosen to ignore them, and then they exacerbate, they metastasize, and now we have to get through this. So
it's funny you mentioned that, because I actually had somebody call me up. They said, the IRS took my money. And I always tell people, no, they didn't. They took their money. It's the money that you decided not to pay them.
Right.
You didn't file your tax returns. So
makes you think.
Yeah, it does make you think. Change the perspective. We are going to jump into our smaller pockets. So, Carlos, go ahead and tell us about either a real estate deal or maybe a tax scenario that went completely sideways. What went wrong, and then what did you learn from it personally? I know you touched on your personal story a little bit earlier, but if you could give us something besides that, or maybe in addition to that.
I had a scenario where a lady came to me, she came to me because she said she had a couple of years of unfiled tax returns. And she needed to refinance her property. When I sat down and had that conversation with her, I said, a couple of years of unfiled tax returns. Are you sure it's only a couple of years? She goes, I'm not positive. My husband normally handles all my finances, all our finances. However, he's been really sick. He's been in the hospital for he ended up getting cancer. So he had been in the hospital. So he hadn't had a chance to do it. So doing what I normally do, I do what's called a full investigation when somebody comes to me with a tax problem, because a lot of people don't know what the problem is. They just know either they owe money or they have some unfiled returns, whatever it might be. So I ended up doing a full investigation and able to see everything that the IRS sees. She comes in, and after I get my report, I had found out they hadn't filed tax return in 19 years.
Oh, no.
How did a couple turn into 19
of unfiled tax
years?
returns? And she had no idea.
Wow.
Because her husband handled everything. And there's a lot of houses this way. One spouse handles all the finances, the other spouse handles something else, right? But in her situation, she had no clue, 19 years. So obviously she wasn't going to be able to refinance her house. And here's the sad part. She started panicking, crying, thinking, how am I going to file 19 years of returns? Mm-hmm. And the good news is, guys, is that the IRS doesn't want 19 years of returns, believe it or not. In fact, in her situation, the IRS only wants 6 years to become fully compliant. So in other words, the IRS says, hey, if you just filed the last 6 years, we will forget all those rest of those years. Mm-hmm. So we were able to do that, just concentrate on the 6 years, ended up giving her the documents to be able to refinance her house. During this process, her husband actually did pass away. So now she was able to get the money, to refinance, get the money to deal with the medical bills that came out of this, and the potential cost of dealing with the funeral expenses and things like that. So
wow,
those are the type of things that happen very often. It's a very common thing that I deal with on a regular basis.
So let me ask you this. We're talking about a lot of scenarios where people are in some deep tax debt and, years and years and years of non-compliance, yourself included. And then I've heard stories of where people actually go to jail because they're not tax compliant. So at what point does the IRS say, nope, we're not playing, we're not going to forgive that debt, we're not going, you're going to jail. Because there was actually a guy locally that had happened to, some sort of tax evasion scenario, and he actually got thrown in jail for a period of time. So what am I missing between the scenarios you're talking about and jail time?
Seth, that's a great question. Is what a lot of people don't realize. You can owe the IRS millions upon millions of dollars and not go to jail. They do not put you in jail for owing money. But there is a rule on the IRS's book that not filing a return is punishable by 1 year for every year that you have not filed. Now, the IRS is as bad and ugly as they are, and we make them seem out to be. They don't want to put people in jail. They want you to become compliant, but they will put you in jail to make an example of. So typically celebrities, right? They haven't gone. Wesley Snipes is always the big one that pops in my head. He went to jail, not for taxes due. He went to jail for non-filing of 3 years of tax returns. It was one of the Jersey Boy guys, I believe, is another similar situation. So I tell people, if you have unfiled returns, that is a more critical situation than the money that you actually owe, because it's up to the IRS to decide whether they want to do that or not. And you don't want to be it could be, maybe you're a local investor that has a lot of real estate, or a big time real estate agent, and you haven't filed in years, and they want to make an example of you. So, and the one thing the IRS has done, and this is part of their increased efforts of collection, I am starting to get now summons for clients that have unfiled tax returns. And then when you actually get that summons, that is a summons to show up to your local office with all your bank statements, all your financial documentation, and you better have a damn good reason why you didn't file those tax returns, because you're going to be basically, there's going to be an interrogation of what's going on here, because they want those returns.
Wow, that is so crazy. Yeah, I'm sure we could talk about some of those stories all day.
We
are going to go into what we call our little nugget. So, Carlos, this is the part of our show where we give our listeners something very actionable, bite-sized, practical that they can apply to their businesses, their real estate practices. What do you got for us?
Here's a big one for me. Something I started doing about 5 months ago. I've been in business pretty much all my life. And it's taking 20 minutes. For me specifically, I do meditation. I actually use transcendental meditation, something I learned about like 40 years ago. Actually went and took a small class here in Palm Springs and kind of blew it off. And then about 7 months ago, I saw another interview with Jerry Seinfeld talking about the one thing that he believes is owed to his extremely successful career was doing meditation, transcendental meditation specifically, right? Taking 20 minutes of just quieting the mind. As entrepreneurs, we're constantly thinking, right? Nonstop. I'm a dad of a senior. There's dad stuff going on. There's business stuff going on. There's my tax client stress stuff. I have to take 20 minutes early in the morning. And I actually purposely get up around 5:30, 6 o'clock and just take 20 minutes of just quieting my mind. And then I have to do it again in the afternoon. It's just because we live in a stressful life. We live in information just coming to us nonstop. You got to take those 20 minutes to kind of quiet the mind. And for me, it's been a game changer. And I'll tell you how big of a game changer. I've been on blood pressure medication for almost 20 years. When I started doing this, my blood pressure actually went to normal, and I don't need blood pressure medication.
Really? Wow. That's a really tangible effect of meditation.
Yeah, and I was in shock because I kept on testing my blood. I'm like, why is my blood pressure normal? It's never been normal. And then I literally stopped taking my medication, and then just kept on monitoring, and it's like it perfectly normalized after this.
That's awesome.
And there's medical studies about how that actually affects your blood pressure. So,
well, and I'm sure that's just overall healthier for you not to be on medication.
Oh, absolutely. Absolutely.
Yeah.
So, Carlos, what does it look like for someone to connect with you on the back end of this? How can somebody, if they were like, hey, great episode, I want to know more?
You know what? I encourage everybody to go pick up my, this is my first book I ever wrote. Let's see if I get that. How to Make the IRS an Offer They Can't Refuse.
I love that.
You can actually pick this up at taxdebtbook.com. You go there, I send you the PDF version of this book, or you can buy it on Amazon for $15. Get the PDF version. It tells my story, and it's just the basics of how to solve a tax debt. There's 3 simple steps that we do that with, and that's the best way of doing it.
Dude, I was excited to have you on today because we were going to get into a subject matter that we've talked about taxes, but not necessarily in the personal side of things. I think I don't want to make an assumption that this isn't a relevant conversation for our listeners, and then something to be aware of moving forward. So thank you for taking your time and coming on the show.
No, I appreciate it. Really love the conversation. And, I really want to be a force out there helping people not deal with the stress and anxiety of the big bad boys, the IRS.
Awesome, man. Thank you.
Thanks.
As always, excited that you joined us for another episode of the Reinvest Podcast. If you want to learn how you can use your hard-earned capital to diversify into real estate, go to our website, reinvestcapital.us, and shoot us a message. Move farther, reach higher, and grow deeper.